the last 10 days, 15 days or so has definitely been demonetization, and it's been taking a toll on consumer stocks. Among the worst hit is real estate. How a real estate company is tackling this difficult situation? We have with us Mr. Kamal Khaitan, the Chairman and Managing Director of Suntech Realty. Hi, Mr. Khaitan. Thanks so much, sir, for joining in. First things first, there's so much of talk about prices correcting, etc. But I want to ask you, in the last couple of weeks, has there been any impact on, on your functioning? Is cement coming to your unit? Is steel coming to your unit? Are transporters, being able to function?
So, good afternoon, Nigel and Rima and viewers. See, this is a short-term pain and long-term gain. Definitely the concerns. There are concerns, but more of the noise, I believe. So, if you talk about the transport and materials coming in the systems for the construction, we have not seen any problems of those kind in the system right now.
Okay. Mr. Khaitan, could you elaborate more on the short-term pain? For primary sales, what could be the expected cut in real estate prices in Mumbai, the region where you operate? For secondary sales, what would be your estimate of any correction in prices? And will there be a delay in launches by the company?
So, when we talk about price corrections, I feel it is too early to mention. It's just 15 days, and as far as Suntech is concerned, what we are today operating in last 15 days, maybe it's too early to comment on it, but there are sales which are happening. It's not that the sales are not happening. And believe that Mumbai market and the organized player should be the least affected market if you see overall. So that, and Suntech is operating mainly in the micro market, Mumbai market, where we see the least pain, and the organized players in the long term will definitely benefit out of it.
All right, Mr. Khaitan, you're sounding quite confident. So in the month of November, you're saying have any sales happened? If yes, where has it happened? At your premium, the BKC project, which is, I think, in the range of what, 25 to around 40-50 crores, or is it in your Goregaon project, which is a much smaller ticket size?
So I will not be able to give you exact numbers, Nigel, because of we are very close to the announcing the results. But definitely I can tell you that we have done quite positive sales as far as in Suntech City or any other projects, and where it comes to BKC projects. In 15 days, last 15 days, we have done one sales, and that is, I think, quite good. Looking at the number, because that is a luxury project, we don't look at too much of numbers happening in 15 to 20 days.
So one sale in your luxury BKC project, right? In the last 15 days.
That's quite good, I believe.
Okay. And you don't expect you will have to drop rates in any of your projects?
So micro market, if you see like BKC, very frankly, where there is more of a demand and the less of a supply, and looking at the people, where especially the Suntech BKC projects are almost completed. So demand in the luxury segment where the projects are completed, it's mainly by the end user, where we see that people may wait and watch for some time, but it will not dry up, like it will not go away. So maybe some sales might get delayed by 15 days, 1 month. People would like to wait and watch, but I don't think the sales prices and sales will totally hamper.
All right, Mr. Khaitan, the street wants to know what is your total unsold finished inventory, the inventory that's already finished. And secondly, I also want to know, you were launching a project in BKC, that's a commercial project. Do you expect that to roll out as per plan? I think Sonia tells us it's supposed to be rolled out in the third quarter as per plan.
So completed and ongoing projects put together, Nigel, if you see, we have an inventory of 7,000 crore. Again, out of the 7,000 crore, if you talk about once again, everybody is concerned about the luxury segment, where we have an inventory of close to 2,000 crore, which is just 27-28% of the 7,000 crore inventory. So even if there is a concern, what everybody is feeling, which we are not much concerned, because we feel our projects are fully almost completed, so it will not much affect that much.
The 2,000 crores, sir, you're saying is completed?
So 2,000 crore is almost completed. Yes, 2,000 crore is almost completed. 2,000 crore inventory is completed, including BKC and other projects. So in BKC, out of the 3 projects, 2 projects are completed, which is close to 1,500 crore inventory, and the other one project, Signia Pearl, which is not completed, which is an ongoing project, and all put together, completed and ongoing projects, there is an inventory of 7,000 crore. So out of which 2,000 crore, if you have is only BKC, so 5,000 crore of inventory. And we are looking at the interest rate, the way, or if you see that there is an increase in bond prices and decrease in yield already. Banks have already started to drop the interest rate on the deposits.
Okay.
And this will eventually, we will see the home loan rates coming down.
Sir, so just, we get that point, but we're running out of time. We understand the promoters have been buying in the open market close to about 1.5 lakh shares recently.
Yeah, so we continue to, we have bought the stake which is there in the public domain. We have increased our stake to 73.75%. That shows that we continue to believe in the growth story of the company, and we are very confident about it. And one more question, if what Nigel had asked me, that we were looking at any launch at BKC Junction. So definitely we have, as you see that commercial demand even in this market is not gone down, which we feel, and that's continuously going up. Even in this market, it's not got affected. So we are looking at launching already whatever pre-inquiries what we have. We are pretty confident. We'll be launching in next 15 days to 1 month, and we're confident of selling it in a short span of time.
Mr. Khaitan, thank you so much for joining us on the show. So not too perturbed, Suntec Realty. Let's slip into a very short break, but on
Mark Mobius, clearly the veteran emerging market investor, and of course a veteran on India as well. Mark, we didn't discuss Trump so far. Let's start over there. At the moment, we are seeing a lot of money being pulled out of the EM. Or okay, not a lot of money, some money being pulled out of EMs. Do you think that this is going to accelerate as President-elect Trump takes over and becomes President Trump?
I don't think it's going to accelerate. We've come down roughly about 6% in terms of money drawn out from emerging markets. Very similar to what happened around the Brexit time, if you remember that. There was a time of uncertainty. I think that money is going to be coming back for a number of reasons. But first of all, Trump stands for growth of the U.S. economy. So we expect growth in the U.S. to accelerate. And secondly, I don't believe that the U.S. dollar is going to remain strong for very long. I think Trump's interest will be to have a weaker dollar so that U.S. industries can export more. So this is another area we have to watch very carefully. Even though interest rates in America will rise, this is a situation which will be very interesting for the world, because with a growing U.S. economy, there'll be a lot more money to be invested overseas, including emerging markets.
I know you wouldn't be wanting to take a bet on the point of the currency, but we've seen the dollar in a one-way street. It's now a 14-year high. If I only looked at the dollar index at close to 102, you think that it is speaking out and that 2017 actually will see the dollar below 100?
I think so. I don't know about below 100, but I don't think it's going to go very much higher than we have now, simply because Trump does not want that to happen. He will want a dollar that's competitive. And of course, all the talk about countries manipulating their currencies is coming to the fore in this administration. And there'll be a very, very close look at where the dollar stands in relation to other countries.
Well, actually, like you pointed out, Trump is seen as the president for growth, and the narrative appears to be that he's going to invest in infrastructure. Will that therefore change your pecking order in emerging markets? Will it be more pro-commodity producing emerging markets?
There's no question that commodities will be helped by the big infrastructure spending in the U.S., but not by that much, because if you look at the totality of consumption of commodities globally, China still is the king. They're the biggest consumer. The U.S. can increase, but it will not have a very big impact the way that China's had in the last 10 years.
Well, I'm coming to China in a minute, but just let me finish the Trump argument. Very recently, in the past few hours and days, President-elect Trump has made statements about stricter immigration rules and H-1B visas on which the Indian IT sector depends so much. But it's been a double-edged sword. There are some people who think that BFSI, the banking sector, actually globally will do well under Trump because of his pro-growth policies, and therefore IT could do well. Are you an IT buyer at this juncture? Do you think Indian IT is at attractive levels?
Yeah, I think the IT sector in India has been beaten down quite a lot and provides an opportunity to buy. I think Trump policies will not have a big impact on the IT sector like manufacturing exporters from India and other parts of the world might have. And by the way, the whole trade policy is up for grabs. One of the interesting aspects of the Trump administration is that there will be a lot more emphasis on bargaining at the individual country level. It will be a de-emphasis of multilateral agreements and an emphasis on bilateral agreements, which can be very good for countries like India and others who have special needs, special requirements. They can sit down with the Trump administration and reach agreement on a number of issues, and that would include IT and other areas.
Well, let me come to the other, if you please, elephant in the room, China. Are you looking at China to destabilize the world economy anytime in 2017, like we saw in Jan of 2016, or will China be a growth factor? What's the China impact on emerging markets and on global markets?
Well, as you know, China continues to grow at a very high rate for an economy of that size. If you take a number, whether it be 5, 6, or 7%, there's a lot of debate, as you know, about the actual growth rate. But even at those levels, lower levels than they were in 2010, for example, the amount of dollars being spent in the China economy is much greater than it was in 2010 and in previous years. So China will still become and will continue to be a growth factor for Asia in particular and other countries around the world. As you know, China is putting a lot of money outside. There's been a rush to get rid of RMB. As you know, the RMB has been getting weaker against the US dollar, and Chinese investors are putting their money overseas, converting them into assets and converting them into US dollars and other currencies. So I think that will continue for a while, but it's probably peaking at this stage.
Okay, well, actually, let's put all this together for the Indian investor community. Mark, in the first place, we've lost, what, 12% from the highs that we had touched, nearly 9,000 levels. We are now sitting sub 8,000. Do you think the Indian markets can go down further on a mix of Trump and demonetization and what have you?
I don't think so. I think we've more or less reached the bottom, and we'll probably see recovery in the Indian market. You must remember the US market is now surging ahead, and the US market leads other markets, and we believe there's some correlation between what happens in the US and other countries. With more and more money being made in the US market, of course, fund managers and other investors will want to balance their portfolio with emerging markets investments, including India.
So, Mark, what will you add to in India, given the scenario you have painted for us in terms of fiscal stimulus, interest rate cuts, Trump's policies and Chinese growth numbers? Which are the additional sectors that you will incrementally add to in India?
Well, what we are particularly focused on and very interested in is the smaller area, the smaller company area, small and medium-sized industries that are in the consumer area, in specialized manufacturing, in pharmaceuticals, in many of these other industries which have been pretty much overlooked. And now is the time to start looking at those, because very exciting things are happening in these companies.
Okay, so it's going to be a bottom-up story for you. You earlier in the conversation mentioned banks. Would you get into, incrementally on a State Bank of India or a Punjab National Bank among the macros, probably because, they benefit from fiscal and monetary stimulus?
Exactly. The money pouring into these banks and the spread that they're enjoying should be very beneficial for their profitability. So, yeah, we look at those banks and others in the Indian economy.
Well, what about the consumption stories? We did have, you know, the likes of Asian Paints or an HDFC Bank that services consumption, or a bunch of NBFCs like Bajaj Finance, which serve consumption. How do you play the consumption theme? Would they be consumer companies? Would they be consumer finances? What do you like in that space?
Well, I think consumer finances have maybe gone a little bit too far at this stage of the game. So I would prefer to go to the medium and smaller consumer plays, companies that are producing products that people want and will be buying at the supermarkets and other retail outlets. And of course, we must not overlook the online surge that's taking place in India and globally. And many of these online sellers will be very interesting going forward. Of course, there'll be many failures, but if we can pick the winners, it will be very, very profitable.